Let's take a look at some charts on Maker from this week's article on Brave New Coin. So Maker is a system protocol where you can send collateral and get back Dai through a collateralized debt position. Initially the collateral was just ETH, but now it's opened up to ETH, BAT, USDC, wrapped BTC, USDC, they have two separate USDCs here, USDC AB, TrueUSD, KNC, ZRX, and Mana. Most of it is ETH and wrapped BTC with some USDC. Everything else not used too much. I suspect that eventually they'll just cut this list down. I doubt that they'd increase it. There's really no reason to. I think 2 or 3 is probably enough. The general issue initially was stability around ETH volatility. So using 2 or 3 or 4 mechanisms for collateral has helped decrease the stability. Now I don't know why the stability fee is decreasing to 0. And I don't know why the Dai Savings Rate, which they introduced when they switched from single collateral to multi-collateral, is also 0. I assume those are basically the same. If fees are 0, savings rate is 0. So we've got 0 interest rate policy here on Maker. Looking at the total value in USD, it's up above 1.5 billion. So there is a lot of money on the line should this protocol fail or should any of this stuff explode. It is the largest DeFi holder of ETH and the largest, I think it's the largest holder of ETH and the largest USD total value locked. This is just a simple image of what the portal looks like. It's called oasis.app now. And you just connect your MetaMask. It shows your balances and then you can send any of this collateral stuff to create the CDP. If we look at Dai active addresses, basically who's using this stuff over time, you can see it spiked up a lot mid 2019 with price. Once they transitioned to multi-collateral Dai, they phased out Psi essentially, and it's been successful. You know, there's continued active address increases here. The overall transaction sizes are smaller than they were previously. This is likely because there's just more transactions now than there ever were. So all in all, very bullish for Dai, Maker, that sort of thing. If we look at total supplies of all stable coins we have in existence, it's over 10 billion now. You can see Dai in the red here has really grown its chunk over the past year. So has USDT ETH. If USDT was a single blob here, it would eat most of this, but the Dai blob is still growing, as is the USDC portion. If we compare Dai to the other stablecoins, circulating supply active addresses, you can see that despite how small Dai is, it actually really has a lot of active addresses relatively, and a lot of active transactions daily relatively based on its circulating supply. So there's definitely a lot of activity and a lot of use for Dai, even though it's small but mighty. And USDT is just, eating the world in the stablecoin department. If we look at average transaction values, Dai is down here. In general, if you have more transactions, the average goes down. So relatively, Dai has a decent amount of transactions. Things like BUSD and HUSD are sort of on exchange stablecoins that aren't really on chain as much, which is why they don't have many on-chain transactions. Whereas USDT is basically what you send in between exchanges, inter-exchange transactions. So that's all going to be on-chain for the most part. If we look at non-USDT stablecoin daily trading volumes, Dai is second to last, basically. I don't know if all the DEXs are included in this value. My guess is they aren't. My guess is this value is actually a lot higher than it looks or appears. It could be closer to even the USDC realm. I just don't know what's actually being calculated here. But Tether, which isn't even on here, is in the 5.5 billion range. So they have the most volume by far. If we look at some Maker technicals here, 50, 200 VPVR volume RSI. The 50 and the 200 have essentially been crisscrossed for the entirety of this pair's since inception. Hasn't really been a great trading indicator, but it is currently bullish, and we are breaking above previous VPVR I mean, the level to watch is this horizontal right here where all this VPVR volume is. So if price can get above that volume, then it'll basically be the most bullish it's ever been, because early investors have sold off. Anybody who's been tired of holding has likely sold off, and then lots of people got washed out on this move, most likely. So all that's left is basically people who are buying. There's really no upside resistance. Certainly people who bought down here might want to sell if they're up 300, 400, 500%. But overall it looks pretty good for up. No bullish or bearish divergences here. If you look at the Maker BTC pair, this is even more trend reversal-y in that it's been very clearly a downtrend, very clean downtrend since early last year. And it's got all this VPVR support volume here. So it does look good for upside. The 50 and the 200 should cross bullish over the next couple of days. Upside to like 0.1, something psychological, previous resistance, that sort of thing. I don't expect mega moon out of this, but the BTC pair does look pretty good. Again, no bullish or bearish resistances, divergences here. And then lastly on Maker ETH, this is mainly where all the volume looks like it is. And the 50 and the 200 crosses have been actionable over the past 2 years. Currently bearish. There's a ton of upside resistance here. So if anything, to me this says you're better off trading ETH than Maker. You're possibly better off in Maker than BTC. And Maker USD looks like it wants to move up in the near to midterm.